Gold, a talking point, reaching all-time highs, but coming back. Is there a possibility for that 2,500 magic number that, many analysts are talking to me about at least? Luca Santos from ACY Securities joins me now. Hi, Luca.
Good morning,
Good
Nadine.
morning to you. Okay, so we've had gold pulling back for the past few sessions.
Correct.
Is this the start of a worrying trend?
Funny you say, some analysts were talking about the 2,500. I was one of those.
Yes.
I was one of those, and I still been, all right? Because I do think that this pullback that we're looking right now, we came up all the all-time highs that you just mentioned, 2,400 and something, down to 2,330 at this moment. Most probably we will get the gold up still, all right? Looking at a more, when we talk about gold, we can't talk about just a day trade. Okay, let's long it today and get out tomorrow. Well, yes, you could do it. But when we look to the price of gold as we just have it now, most probably we will be retracing back to the 2,300, 2,250, around that level there, and pushing back up. Now, the reason is every time we get an all-time high on gold, gold just come back, all right? Because most of investors get the profit out, and it's the nature of the market as any other commodity, any other stock, any other thing from the market, stocks, whatever. It come back a little bit, and it's just a pullback, in my opinion. Now, we need to understand what made the big move of gold in the last 2-3 months, as we just say. Actually, the whole 2024 until last week, we had a huge push, 18% up. All right, so in my opinion, gold is still a very good option to long it. All right, this is just my opinion. Targeting 3,000 to 3,200 until Q4 of 2024.
Really? Okay.
Yes.
So the fundamentals are interest rates?
Yeah, look, central banks are still buying gold because
they are.
of the Basel III Act, and they will have to buy gold. And look, on a discounted price, would you not buy? When you go Coles, when you go Woolies, you see the discounted price. Oh, this is good. I'm gonna buy it, right? I want to have some good food. I want to have some good meat. Of course, I'm gonna buy. So, think about a central bank with how much money they have. Do you think they won't buy gold? They won't protect themselves of what is happening right now in the world, or the central bank's divergency, or the forward divergency, everything happening. You really don't think that they want
geopolitical risk,
US
geopolitical debt,
risk, everything summed together is just a mix of instability for the economy at this point. And I do believe, and I was just talking to my friend before coming here, Adrian, and he was like, yeah, most definitely, he works for one bank, so he was like, most definitely we will continue to see a push higher for the gold.
Okay, so you're targeting 3,000, you said?
3,000, 3,300.
Okay, so that's fourth quarter.
Yeah, fourth quarter, not tomorrow.
Yeah.
Yes, definitely.
Okay, so that's good, okay? That's the basis of our conversation, but you did mention central banks, so it would be remiss of me to have you here when we got the meeting minutes from the RBA.
True.
And not ask if that has colored or changed your view as to the rate cycle here.
Look, there's a very polemic question. Will the RBA cut the rates this year? Right. For this question, I'm going to answer the question with the Fed, because I know I'm a bit polemic on this. But remember about the Fed last year, November and December, when everyone was expecting 7 cuts from the Fed in 2024?
Yeah, well, I'll say I wasn't, but what?
Okay, you wasn't, all right. Well, then you could work with us. That would be awesome. So the Fed was expected to be cutting 7 times this 2024. It's already mid of 2024. We haven't even talked about a
May
cut.
May the 24th of 2024.
Okay, yeah. So I don't think the RBA will cut either. Inflation is still high, all right. We still have an uptick on retail sales. Okay, the last one came lower. Well, congratulations, but we're still high. We're still much high. People still spending money. And the RBA, one thing that they're doing correct is holding the rates. They probably can't sustain a cut from the market. Now, these have a big implication on the Australian dollar. Of course, we're seeing the Australian dollar just dumping right now. Let me check the price of it. At this moment,
65.98.
Yeah, 65.98. Most probably we will be looking down to 64. Okay. in the very short term,
Yeah.
probably 1 month, 1 month and a half.
Pretty weak.
Yeah, I just want to remember that last time I was here, I mentioned it about the 67 cent. Most of the people judge me because, 67, no, it's too much. Well, it got hit it. So now we're going back to 64.
Just letting you get away with all this because it's a Friday. Okay.
Thank you.
Yep.
Yeah.
So where to now for the Aussie dollar?
Aussie dollar most probably 64. I do believe on a strong US dollar in the coming quarters. All right. The Fed won't cut. Most of the market is, 45, 46% of the market is priced in for a cut in 18th of September for the Fed. I don't think it will happen. I do think that this last inflation number from the Fed, from the USA is just a little thing. When we look to the ocean, there's a vast majority still very high, the inflation. So just a small downtick won't help the inflation to come low. I don't think so.
Okay, so the Fed's not going to cut. You're saying the RBA is not going to cut.
No one will.
No one.
No.
But how about the BOE and the ECB? Everybody's saying
Okay,
as early as June,
look,
although that was a hot inflation read in the UK last night or night
Yeah,
before last.
no. We had 2 days ago the CPI. It was a good trade on the pound, and we had the PMIs as well yesterday. That's not looking too great. And today we're going to have the retail sales, okay, for UK. I do think that it will be a downtick on the retail sales just because the manufacturing and services PMI were not looking too great. Therefore, I'm just trying to combine the model here and see, okay, if the manufacturing and the services are not looking too great, therefore retail sales may not look too great as well because people won't be buying from services and from manufactured prices. Yeah. So I do believe, I don't believe on a cut from the BOE as well. The only one that already done it is the SNB, the Swiss National Bank. I think that's a done thing for them, and that was mostly expected. One thing that I do think that the BOE is doing pretty well is returning inflation down. They're doing pretty good from 3.2 to 3.3 year over year. They've done a pretty good job. I have to clap their work there.
Okay, we'll let them know you've got to clap for them.
Yeah.
All right, so are you finding plenty of trading opportunities out there?
Oh, definitely. Yeah. There is definitely plenty of opportunities in the market, especially in the Forex market right now. Commodities as well, and some of the currencies are very, very strong, like the US dollar. Some people think that the US dollar is done, is this and that. But more and more this rhetoric, more and more this forward guidance coming from all the central banks just make the US dollar stronger and leading to all the currencies just getting defaulted by the USD. My pick, I think, if you ask me, my favorite trade for the year would be gold. On those cheaper prices as we're seeing gold right now, I think it's a good pick between everything.